certain payments can be made in it. I think they view it generally as too small. Right now, Bitcoin's less than like $500 billion, and it's this like volatile, free floating one. And so the way that I noticed the way that academics or economists often approach this is it's like not exactly as they vision. They're like, oh, that can't possibly work. And so I think it will probably keep being dismissed for a while until it's too big to ignore. Right. So right now, all the major powers are looking for these more like, specific agreements, whereas Bitcoin is more like the people's money. Right. It's kind of the people's like global settlement asset. And I think that's going to be the case for a while. And, if Bitcoin gets to a point where it's a multi-trillion-dollar asset, and the volatility starts to reduce because it's more widely held, that's when I think that more and more nations will be like, wait a second, maybe we can use this as a reserve asset. Maybe we can use this as a payment system. I think it's just still too small and volatile for it to be on most of the radar in a truly serious way.
I wanted to ask you, Lynn, what are some really big threats to Bitcoin? Right now, the leaders are in Davos, talking about how they're going to centrally plan everything. And they've negatively spoken about Bitcoin already and how they need to regulate the space. What are the biggest threats to this asset class? Because it is still so young and so volatile, as you mentioned.
So there are a lot of ways to slow it down. I think that the lowest hanging fruit would be to cut it off from the banking system. And so, the way that, say, in the United States, we have the First Amendment, and we have other kind of protections that have been successfully used to, defend the use of encryption, defend the use of code as speech, right? So it's pretty hard to tell people that you cannot run a full node open source software, that you can't, memorize 12 words, that you can't, flip a coin 256 times and generate a private key, right? It's very hard to enforce on that level. But it's really easy to tell banks that you can't send money to crypto exchanges or brokerages, or fiat on-ramps into Bitcoin and crypto and things like that. And so that's kind of the big lever that could be pulled by the United States, by Europe, and by some of these other major countries. And it depends in part how short-sighted politicians are, right? Because on one hand, they might want, to pull that, be like, no, we're going to defend ourselves against this like rising, like, decentralized currency. We're going to shut off the on-ramps to it. But then you also drive out businesses from your jurisdiction, right? So if the United States does it, but Australia comes out or another country comes out and says, build all your businesses here, then it basically, in the long run, is probably not going to be good for that. We saw, back in 2018 and for years since then, India was exploring that, right? They were like, kind of flip-flopping between maybe we should ban all this. Mm-hmm. And then it's like, they kind of realized like, you don't actually ban it, you just ban yourself from it, which can maybe work temporarily, but it's not really a good long-term strategy. And so overall, I think that the biggest impediments are just restrictions on privacy, attempts to make it harder to self-custody your asset, as well as kind of the potential giant attack would be to severing it from the banking system. But that'd be a pretty major event.
Before we start to wrap up, I just wanted to ask you, going back sort of to Fed policy, if you were at one of these press conferences with Jay Powell, what would you ask him?
I think that's a really good question because I probably try to troll a little bit, not because I dislike him. It's just because I find the process so interesting. My view is that I just fundamentally disagree that actively managing the root layer of money is a good thing, right? Kind of like how if you talk to most people, you say, would you say that price controls are a good thing? They'd say no. And it's like, well, why are we controlling the price of money then? Like, why are we actively deciding that, everybody in Florida has to have the same price of money as everybody in Washington State, right? Why, in a country of 330 million people, why do we have this like nationwide price setting thing for money? Why can't we let it happen more organically? But in any sort of tactical sense, I know that those types of questions don't really matter. And the Fed's going to do what it's going to do. It's going to manage its own ledger the way that it sees fit. And so, if I was if I was at like a Fed event, I'd be approaching it like any other reporter does. Like, what factors are you considering for how you're going to approach this? things like that. So it's kind of like what I actually think versus if it was my job to do that sort of thing, what I would have to focus on in order to, basically get useful information for people in any sort of like near-term sense.
Yeah, but is there a question where if a reporter asked it, you'd be like, "Oh my God, that was amazing," and what's he gonna say? This has to strike at something that he's truly intending with this whole market.
I think if you point out like the U.S. fiscal situation, you say, okay, if you hold rates this high for this long, and that starts compounding into higher and higher interest expense on the U.S. debt, and you start to kind of just place that math in front of them. The math is so painfully obvious, and they always kind of like ignore it. If you could structure a question so they have to kind of address it, it could be pretty funny. That'd be kind of like one of those epic, questions that probably gets around like a clip going around Twitter or YouTube and things like that. But I think it's going to be ignored until it's not. I think that during the repo spike of 2019, I think some reporters missed up some really good questions because essentially that was a T-bill oversupply problem, and the Fed was in this awkward position of having to increase their balance sheet while saying we're not doing QE. And I do think there will be future events like that where they're forced to buy treasuries, even if we're not necessarily in a recession, and the mental gymnastics or the verbal gymnastics they have to go through to explain why exactly they're doing that gives reporters a really good chance to be like, why exactly are you doing this? You're saying there's too many treasuries in the system. What does that mean? And so I think those are the more fun questions to explore.
Right. Well, you touch on that important point we always mention in the Bitcoin space. It's just math, and they have to print. We have to go further into debt. So it kind of makes you question what is all of this for? And where I want to leave this conversation is you had a conversation once with Peter that I've sometimes thought about, and I have been meaning to ask you about this for clarification for a while, because one of the things that makes me passionate about Bitcoin is this idea that we could create a system that is more accessible and more fair, where it would be based on sort of the value you provide and bring to the table, as opposed to it sort of rigged where it's the Cantillon effect. The people closest to the monetary spigot get access to the capital first. They get richer and richer. But one thing you said in a podcast, I think it was sometime last year with Peter, is that actually if you look at QE, as QE increases in our country versus others, it's not necessarily correlated with wealth concentration. And I was wondering if you could kind of break that down a little bit more, because I always thought that because of our system of money printing and QE and injecting liquidity that goes to certain, classes and corporates and all of that first, and they buy back shares, they get richer and richer and they hold the assets, and it's at everyone else's expense, coupled with the fact that with the trade deficits that we're running, we're crushing the middle class, we're incentivizing for all the labor to go elsewhere. So why is it that we've had more wealth concentration here with QE going up, but at the same time it's not necessarily correlated?
So the short answer is a lot of it has to do with fiscal decisions. But if we back up a second, if we kind of examine the hypothesis that QE is heavily correlated with wealth concentration, then one thing that we should find is that if you look at the major countries, the more QE they did, the more wealth concentration we'd expect them to have if this was a strong correlation. In reality, we find either no correlation or actually slight inverse correlation. So, for example, Japan did way more QE relative to its economy than the United States did, and yet they have less wealth concentration than we do. Europe has done somewhere in the middle between Japan and us, and they're also somewhere in the middle in terms of wealth concentration. So when you kind of look at that variable alone, you say, okay, clearly there has to be other variables here explaining how wealth concentration erupts that are either overriding this or impacting this in some way. So the argument is not that QE reduces wealth concentration, but that it clearly can't be the main variable if you see such a complete divergence between countries with high wealth concentration and countries that have done a lot of QE. And so instead what I argue is that fiscal decisions are a large part of how wealth concentration develops, because at the end of the day, mostly what QE is financing the government. So if the government is making decisions that actually are neutral to even reducing in some ways wealth concentration, then QE is not necessarily going to be a big impact on wealth concentration. On the other hand, if the federal government is doing something that greatly exacerbates wealth concentration, then the fact that QE is helping to fund that is going to boost wealth concentration. And so, for example, I point to things like in the United States, we have a much more problematic nutritional situation. And also the way our healthcare system is structured, we pay way more per capita for healthcare, despite having a lower life expectancy than Japan and most European countries. That's kind of how it's structured. The way that our just tax system is structured is somewhat differently. And so overall, a lot of those wealth concentration are in large part fiscal. Actually, a really good example was during 2020, a lot of people focused on the stimulus checks as a cause of inflation. But in my view, the thing that did not get enough attention was the PPP loans that turn into grants. Because a middle class person, and those are subject to a certain income limit. You could get a $1,200 check, $1,400 check. You could get child care tax credits, so another few $1,000s. But if you were running like a law firm and you made like $1 million a year, you could then apply to the PPP loan program and say, hey, I'm gonna have to lay off my employees. Can I have $500,000? And then they say yes, and then you don't lay off the employees. You didn't really need to anyway. That loan's forgiven, and so that $500,000 just went to the already rich partners of the law firm. I mean, we looked at actually it was a pretty public program, and when you look through the list of people that received it, on one hand you do have, for example, some small restaurants received it, right? Some entities that were shut down through no fault of their own would have otherwise gone bankrupt and got to get this program. On the other hand, it was a heavily abused program where investment advisors, law firms, investment research organizations, they would apply to this even though they had no real intent or reason to lay people off, weren't really needing this at all, and they actually got like an order of magnitude bigger capital injection than someone making $100,000 and getting a $1,400 check. And so it's like a series of fiscal decisions like that. Another one was going back to 2008, the fact that